Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, December 2nd, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here that the ES rallied over the last 2 months here. This is something we talked about back in the August monthly outlook. I mentioned right in this time frame right here that if in August we see a heavy pullback, then that could be the low heading into the end of the year. Additionally, I mentioned that if the August pullback is a deep pullback, then any pullback in October could be a buyable higher low for a continuation into the end of the year. So far, that has played out tremendously. Over the last month, we've had a very bullish month, rallying throughout the month. And right now, what we're seeing is something to just keep an eye on. Again, this market is extremely bullish. But what we're seeing right now is a brand new high up here above 2-day highs, above last month's highs, above all-time highs, right? And it has been rejected so far this morning. Price returned and rejected off that zone at around 5 in the morning here. 3-point reversal up there and then dropped down to current levels. This is a similar type of price action that happens after you see a big up month. You tend to see a rejection here, and if the high and the close are rejected, then you tend to see a pullback to the midpoint of the previous month. That's just shy of 3,100. At times you can also see a pullback that's as deep as the previous month's low for an engulfing month. As a matter of fact, that's what happened last December as well. So if you go back to last December here, you'll notice that right there, that's the first trading day of December. It came up here, wiped out some highs, and then dropped to the mid, and then dropped even further all the way down. So again, not saying that it's going to be this type of price action, but after you see a pretty bullish move and you see a rejection of the previous month's high, you have to be cautious there, because if there's a full-on rejection of these prices, say a failure to hold 31.44s, then when 31.45, then we could open up a return again back toward the midpoint of the previous month's range, which is about 30.94. All right, let's take a look here at the NQ. Now, one thing to keep in mind is that while this market remains very bullish here and we could see a pullback from this current high, say to the midpoint of the previous month, this market remains bullish. So even if a pullback were to occur to the previous month's midpoint, like that 30.94 in the ES, it could be an opportunity to watch for a trap and a reversal. So any pullback, even perhaps into that 82.50, could be an opportunity for bulls to defend and look to reject back up. A failure to hold that midpoint would open up a return back to the previous month's low. Now in this case, the NQ did not take out the previous highs there. It fell just shy of those highs. Let's see the actual level right here, 84.57 quarter. Today's high is 84.57 quarter. So very, or it was 58 quarter rather was the previous highs there. 58.75 over here. So really needed to get to 59 to kind of break. Did not quite get that this morning and turned back down. Again, when the previous month's high and close are very close to each other and they're both rejected, the next target is going to be the midpoint. That's 82.75. If we see a pullback to that point, again, that could provide a bounce opportunity. If there is no bounce there, things could get ugly and we could see a reversal back to the previous low. All right, let's take a look at crude oil now. Now, crude oil had a significant down day in the previous session here. You can see we had a very compressed range here. This 5-day range, very, very narrow. Not super narrow against average, but very narrow in general. We got a big breakout here. One thing I talked about before was this channel right now and how pullbacks to the channel has led to buying opportunities. We're back down to it right now. We got a new high, but didn't quite get into the upper end of the channel at the top. Again, at some point, this type of pattern needs to break. If we're breaking down right now, that would make sense with the season. Again, the seasonality is very bearish for Q4 of crude oil. But at the same time, this has been October, November, and it's been up off the lows after this hard drop. So it's actually been up in Q4. Modestly here. I guess the Q4 close or Q3 closes here. So we'll see. Does this level hold? 54.70. If not, that could open up quite a bit more weakness back to the previous support, 51. If this channel continues to hold and you know, again, the next level again takes you to a new high back up toward 58 to 59. So right now, I'm going to watch this zone and see how it plays out. At the moment, a little bit of strength here, but again, you got the midpoint of the previous month's range right here in play. You got the midpoint of the Friday's range in play. If there's a failure to really maintain acceptance above 56.50 here, that could suggest a little bit of weakness, or at least more range-bound action. All right, let's take a look now, lastly, at gold here. This is gold. Now, gold has been very, very tricky here lately. Obviously, we had the big rallies. We've hit all of our targets. Lately, we've had kind of a downward sloping channel. We talked about this being a good buying opportunity off of the previous month's low, 1465 here. That rejected it, tried to form a higher low and failed. But now the failure is failing, and now we're back up, and this is a super narrow range that's still developing around that 1465. 1465 is that low. If it keeps holding it, again, we have a shot to squeeze. We haven't been able to take out a new high. That's why I've been shooting for 1500 to 1495, but we haven't even gotten that lately. So we have a very narrow range that's developed here in gold. If you put this thing on a 10-day range basis, you're probably going to see how compressed it is. So let's do that. There it is, 10 days. Down here, very compressed over the last 10 days. You can see it right there. Again, on a breakout, it should get at least 45 handles. At least 45 handles on a breakout from a narrow 10-day range like this. So again, if we're above 1480, that could mean 1525 as a retest. 45 handles. If we break down through 1460, then again, we could be dropping to, say, 1415, 1420, right? Somewhere in that zone. So right now, we could be looking at a pretty significant breakout ahead. The 10, 12, 15-day range is very, very compressed. Keep an eye on 1480 and 14. Right now, 1460 is probably the level, but again, something below 1450 would really get things going. So keeping an eye on this range for signs of expansion down the road. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trade room. Take care.